So a missile was just launched thousands of miles away, right? And it just quietly, secretly added about 20% to the cost of your groceries.
Yeah. It is, it's a terrifying reality when you actually look at the numbers.
Because I think most people think global conflict is something that happens, over there. It's on a screen or it's a breaking news headline. It's just lines changing on a map.
Right.
But if you really want to understand what's happening in the world right now, and I mean, more importantly, what is happening to your own money, you shouldn't be looking at maps at all. You need to look at ledgers.
Exactly. Because when you strip away the political rhetoric and, the breaking news alerts on your phone, you are just left with the raw math.
Yeah.
And as an accountant, I look at the balance sheets.
Yeah.
And the math right now is indicating this massive fundamental shift in how the whole world operates. We have essentially entered the era of the war economy.
Which is wild to think about. So today we are taking on a really fascinating, if somewhat chilling, economic breakdown centered around the April 2026 International Monetary Fund report.
The IMF report.
Yeah, and they gave this report a really haunting title. They called it The Global Economy in the Shadow of War.
It's quite the title for an economics paper.
Seriously.
Yeah.
So our mission for this deep dive is to translate these huge, abstract geopolitical conflicts into the cold, hard numbers of an accountant's ledger.
To figure out exactly how it impacts the listener.
Exactly. We are going to figure out how this shadow war economy is just quietly draining your wealth. Okay, let's unpack this. Because while everyone was, waiting for interest rates to drop back down and waiting for inflation to finally cool off, the world just completely pivoted.
It did. The peace dividend that we've all lived on for the last 30 years is just, well, it's officially dead.
And real quick, for you listening, the peace dividend is that incredible 3-decade stretch we just lived through where global trade meant peace. And peace meant incredibly cheap goods.
Right, like getting next-day delivery on flat-screen TVs.
Yeah, exactly. Because the oceans were safe and supply chains were optimized purely for profit, not for security. But now, looking at the IMF numbers, that is gone. Global defense spending is hitting $2.6 trillion this year.
$2.6 trillion. The sheer size of that is hard to conceptualize, but the velocity of that number is what really catches your eye as an accountant.
Right.
We're looking at an 8% jump in just 12 months.
I want to stop on that 8% for a second.
Very
Because an 8% jump in a single year for the entire globe is massive. I mean, if your own household budget jumped 8% overnight purely because you had to buy security cameras, reinforce your doors, and install a perimeter alarm, you would feel that squeeze instantly.
Oh, absolutely. You'd have to cancel vacations.
Let's stop going out to dinner, maybe take on a second job, and the globe is feeling that exact same squeeze right now. But I want to push back here for a second.
Oh, yeah, sure.
Because my instinct tells me something a little different. I have a hard time buying that $2.6 trillion in defense spending is inherently bad for my wallet.
How so?
Well, we have always been told that, World War II pulled us out of the Great Depression because it created all those massive factory jobs. So shouldn't building $2.6 trillion worth of tanks and stealth fighters actually stimulate the economy? Doesn't that put money in people's pockets?
It is the most common assumption out there. But it's wrong. Or at least, it ignores the underlying mechanics of modern manufacturing. It's the wrong kind of growth.
Wait, why is it the wrong kind of growth?
Because yes, a massive defense contract creates jobs in some very specific sectors, but it actually destroys value in the broader civilian economy. In accounting, there is a concept we use to describe exactly this phenomenon. It is called crowding out.
Crowding out. Okay, walk us through how that works on the balance sheet. Why does building a tank destroy value?
So, think of the global economy as having a strictly finite pool of resources at any given moment. There are only so many highly skilled electrical engineers graduating each year, right?
Right.
There is only so much refined fuel available for transport. There are only so many specialized microchips that can be produced in a quarter. So when a government decides to rapidly expand its military, they aren't magically creating new resources out of thin air.
They're using what's already there.
Exactly. They're actively competing in the open market for the exact same resources that you need for your daily life.
Oh, I see. I suppose the military isn't using some, secret, government-only periodic table of elements.
No, they need the exact same microchips for their missile guidance systems that the auto industry needs to put into your new civilian car. They need the identical raw materials.
Wow.
And when the government enters the market with basically a blank check and a mandate for national security, they just buy up those resources at whatever price it takes.
Leaving us with the scraps.
Yeah, the civilian sector, the companies making your cars, your electronics, your medical devices, they all just get pushed straight to the back of the line.
It's like trying to build a house, but a billionaire just moved into town, bought up literally all the lumber, and hired all the contractors in a 3-state radius to build this mega mansion.
That is a perfect analogy.
Right, because you might have the money saved up for a normal, modest house, but you can't build it anyway. You're completely crowded out.
The materials are gone, the labor is gone.
And if you do manage to find some leftover lumber, you are going to pay an astronomical premium for it.
Precisely. And if we connect this to the bigger picture, we have to look at the ultimate lumber of the global economy.
Which is what?
Well, microchips and engineers are crucial, but energy is the foundational layer of everything we do. Without energy, the entire global supply chain just freezes.
Which brings us back to the most immediate pain point in this IMF report. Because if the military is hoarding the resources, that scarcity has to be showing up in civilian prices right now.
It absolutely is.
Like, the Middle East conflict has severely disrupted shipping through the Strait of Hormuz. And because of that geopolitical stress, Brent crude oil is back over $100 a barrel.
Yep.
So let's trace that fuel scarcity down to something everyone buys. Because earlier I mentioned the source claims a geopolitical conflict added 20% to your grocery bill. How does the accounting actually work on, say, a gallon of milk?
Well, energy is the ultimate input cost for absolutely everything.
Input costs.
Yeah, an input cost is just the basic expense required to create or transport a good. So let's look at the ledger for that gallon of milk. When you hand over your credit card at the grocery store checkout, you aren't just paying for the dairy farmer's labor.
Right, I'm paying for the cow, the feed.
You're paying for the diesel fuel in the tractor that harvested the feed for the cow. You are paying for the petroleum used to manufacture the plastic milk jug.
Oh, wow. I didn't even think about the plastic.
Yeah, and you are paying for the electricity, which is often generated by natural gas to keep the distribution warehouse refrigerated. And finally, you are paying for the diesel in the delivery truck that brought it to your local store.
So if the cost of crude oil spikes because a shipping lane is threatened thousands of miles away, every single step of that milk's journey suddenly costs way more.
Exactly. The farmer pays more for fertilizer and diesel, so the raw milk price goes up. The packaging plant pays more for petroleum, so the plastic jug costs more.
It just compounds.
It does. The trucking company's fuel expenses double, so their freight rates double. By the time that milk hits the scanner at your checkout lane, all of those compounded energy costs are passed directly to you. It's basically a geopolitical tax on the entire supply chain.
Okay, here's where it gets really interesting. Because the governments of the world are actively paying for this shadow war economy too. I mean, they're the ones spending that $2.6 trillion. But if everyday prices are soaring because of these energy input costs, how are the governments actually financing all these stealth fighters and munitions? Where is that $2.6 trillion coming from if everything is more expensive for them too?
It is hidden in the public debt.
Debt. Course.
Yeah, this is the part of the ledger that politicians really avoid discussing. When the IMF analyzed historical periods of geopolitical tension, they found a very distinct pattern. During what they classify as wartime booms, public debt jumps by an average of 14 percentage points.
14 percentage points! That is a massive structural spike in national debt. How does a government even pay the bill for a spike like that?
Well, when a government suddenly needs to finance a 14-point spike in debt, they essentially only have 3 choices on the ledger.
Okay.
What are they? Choice number 1 is the most straightforward. They can raise taxes.
Yeah, but nobody wants to run for re-election on a platform of drastically raising income taxes on the working class to pay for overseas defense contracts.
No.
I mean, that's just political suicide.
Exactly. So choice number 1 is usually off the table immediately.
Right. So what's choice 2?
Choice number 2 is they can have the central bank print money to monetize the debt.
Wait, monetize the debt? Does that just mean printing new dollar bills to pay off their national credit cards?
In simple terms, yes. It means the central bank creates new money out of thin air to buy the government's own debt. It injects this massive amount of new currency into the system.
But we all just live through the consequences of that. The world saw what happened when we printed money during the pandemic. It triggered the massive hyperinflationary scares of 2022.
We all felt that.
Central banks spent years aggressively hiking interest rates, causing all this economic pain, just to put that inflation genie back in the bottle. They aren't going to lightly fire up the printing presses for trillions of dollars again, are they?
No, they really don't want to. Which leaves them with choice number 3. And according to the IMF data, this is the primary mechanism being used right now. It is a phenomenon we call the silent cut.
The silent cut. So, meaning they cut my taxes but don't tell me. Or they cut my benefits without a vote.
No, they keep your taxes exactly the same. But instead of officially voting to cut the education budget or the infrastructure budget, they simply let baseline inflation eat away at the real purchasing power of domestic social services.
Oh, wow.
Yeah, they keep the funding flat, or maybe increase it by just a tiny fraction while inflation surges.
Let me make sure I understand the mechanics of this. If inflation is running at, say, 5%, and my local school district's budget stays the exact same on paper as last year.
Which looks like a stable budget to the voters.
Right, but they can actually buy 5% fewer textbooks, pay for 5% fewer bus routes, and hire fewer teachers.
Precisely. The schools get less real funding. The roads stay broken because the cost of asphalt has doubled, but the highway budget hasn't budged at all.
That is insidious.
Social safety nets quietly shrink. Meanwhile, the defense line item on the national ledger is explicitly adjusted for inflation to ensure the military gets exactly what it needs. That line stays bright green.
So the silent cut is basically an invisible tax. We are indirectly funding stealth fighters by letting our local potholes go unfilled.
What's fascinating here is how seamless this wealth transfer actually is. Without passing a single controversial tax hike, without printing hyperinflationary amounts of new currency, the government is effectively executing a massive wealth transfer from the civilian economy, your schools, your roads, your healthcare, directly over to the military-industrial complex.
That is just whack.
You are paying for the war economy, you just aren't getting a receipt for it in the mail.
The ledger tells the truth even when the political speeches don't.
Always.
So we have this massive crowding out effect, hoarding the lumber and the fuel. We have a 14-point spike in debt. We have energy input costs driving up groceries. And we are experiencing this invisible wealth transfer through the silent cut.
Right.
So what does this all mean? Specifically, what does this mean for the listener's money in 2026? How do we navigate this when the rules of the game have so clearly changed?
Well, if we look closely at the IMF report, we can extract 3 highly actionable realities for anyone managing their own finances right now.
Okay, let's hear them.
The first reality is about the nature of inflation itself. You need to accept that inflation is going to remain sticky.
Sticky inflation, meaning it's not a temporary glitch. It is just a feature of the new system.
Exactly. For decades, central banks targeted a nice, steady 2% inflation rate. But in a war economy, where the government is actively crowding out civilian resources and energy supply chains are constantly under geopolitical stress, and the silent cut is being used to finance debt.
2% is gone.
2% is a total fantasy. Do not expect inflation to return to that baseline anytime soon.
Which means if you are just sitting on the sidelines, keeping your cash in a low-yield savings account, waiting for prices to quote-unquote go back to normal before you invest or buy a home,
You are actively losing.
yeah, you are letting the shadow economy erode your wealth year after year.
Waiting for the old normal is a guaranteed way to lose purchasing power. And, if we know inflation is eating our cash, we have to look at where the actual capital is flowing.
Right.
We follow the ledger.
Where is it pointing?
Well, for the last 20 years, tech was the undeniable king of growth.
Yeah.
Right.
Right.
But in this new era, defense and energy are the new tech.
That is a huge paradigm shift. I mean, for my entire adult life, every massive investment boom has been software, apps, and artificial intelligence. Now you're saying a company that builds drones or secures an oil pipeline is the new Silicon Valley.
If the world is engaged in a shadow war, then the companies building the shadows, the defense contractors, the energy infrastructure firms, the cybersecurity companies, that is where the massive government-backed capital is flowing.
That makes sense.
The $2.6 trillion has to go somewhere. So as an investor, ignoring those sectors means ignoring the biggest structural trend in the global economy.
It's like ignoring the internet in 1999. You have to look at where the ledger is pointing. But what about the cost of borrowing? If the government is issuing trillions in debt, Who is lending it to them, and how does that affect my ability to get a loan?
This brings us to the third point, the 5.9% rule.
Okay.
We all fully expected mortgage rates to eventually plummet back down to the 3 or 4% range we got used to during the peace dividend.
Right, everyone's just waiting for rates to drop.
But you have to look at the mechanics of the bond market. Governments around the world are issuing trillions of dollars in new debt to pay for defense. They have to find lenders to buy those government bonds.
And investors aren't just going to hand over trillions of dollars out of the goodness of their hearts.
No. When a government floods the market with trillions in new bonds, supply outstrips demand. To convince you to buy their bond instead of investing in Apple or just holding cash, the government has to sweeten the deal.
So they raise the interest yield.
Exactly. They have to offer a higher return. And if the government is offering high guaranteed returns on their bonds, the entire financial system has to raise its rates to keep up.
Oh, I see.
They cannot drop rates back to zero, or no one would buy the bonds needed to fund the defense spending. Because of this, higher interest rates are structurally baked into the war economy.
So if you are looking at a mortgage rate of 5.9% right now, and you're thinking, well, I'll just rent for another year and wait for it to drop back down to 3%.
You might be waiting a decade. This raises an important question about how we define normal going forward. A 5.9% interest rate might simply be the new normal for a very, very long time.
Wow.
The era of incredibly cheap money was a direct feature of the peace dividend. And the peace dividend is gone, so the cheap money is gone too.
Okay, let's zoom out and summarize this core shift, because it really is a total restructuring of the world we thought we knew.
It is.
Most of us listening grew up in a world where global trade meant peace. It meant collaboration, optimized supply chains, and crucially, lower prices at the register.
Right.
But as we've seen today by looking at the ledger, that reality has totally flipped. We are now living in an era where we are all paying a geopolitical tax.
Yeah, perfectly said.
It's a tax on every gallon of gas, on every loaf of bread, on the interest rate of your mortgage, and on the unfilled potholes in your neighborhood. We are living in a shadow economy now. And in a shadow economy, the only thing that's truly free is the information you arm yourself with.
Understanding the mechanics of the ledger is your best defense against it. But there is one final provocative thought I'd like to leave you with, building on everything we've unpacked from this IMF data.
Okay.
We established that capital is currently flooding into defense and energy, making them the new tech.
Yeah.
But we also know that resources, the brilliant engineers, the raw materials, the funding are finite.
A crowding out effect.
Right. So if the absolute brightest engineering minds of this generation and the absolute biggest research and development budgets are being entirely consumed by the military-industrial complex, what happens to actual civilian technological innovation? Are we quietly entering a dark age for everyday technological leaps?
That is a scary thought.
You really have to wonder, will the next great smartphone innovation or the next revolutionary medical device or the next breakthrough in renewable civilian energy be delayed by a decade simply because the microchips, the engineers, and the funding were crowded out to build a fleet of stealth fighters?
That is a remarkably sobering thought. We might be paying for this shadow war not just with our bank accounts today, but with the future we just don't get to build tomorrow.
Exactly.
Well, thank you for joining us on this deep dive. Keep looking at the world through the lens of the ledger, keep questioning those headlines, and we will catch you next time.